If you're a real estate investor, you're probably wondering if this is still a good time to invest in real estate, or is this the time to dump your money into the stock market, or maybe this is the time to go all in into crypto. Now, for full transparency, I've been investing in real estate for about a decade and a half, and my goal with this video is not to tell you what to do because I'm not a financial advisor, I'm just a random guy on YouTube. Instead, my goal is to show you what's happening in the real estate market. That way you can be a smarter real estate investor, understanding the risks, understanding the opportunities, because there's a lot of changes happening. Take a look. Housing has become very expensive in America. Back before the 2008 housing market crashed, housing prices peaked in 2006 when the median house in America was selling for around 6.8 times the median household income. In other words, the average American was paying almost 7 times their annual salary to buy a house. Fast forward a decade, and now the median house costs about 5.5 times the median salary in America. And then let's fast forward to today, where housing prices have been booming, but incomes haven't really kept up. Today, you have to pay about 7.25 times the median household income to afford the median house in America, which is higher than where we were before the 2008 housing market crash. Now, to understand what this means as a real estate investor, we have to go a little bit deeper. So let me erase the whiteboard and show you what I want to go over in this video. There are 4 things that I want to go over. Number 1, I want to go over what's happening in the housing market, in the real estate investment market now, in this real estate economy. Then number 2, I want to go over potential changes in regulation and taxes with President-elect Trump entering the White House. And then number 3, I want to go over the opportunity cost of investing in real estate versus investing in stocks versus potentially investing in cryptocurrencies. And then I want to wrap it up by talking about number 4, how do you actually win as a real estate investor in this economy? So make sure you stick with me until the end of the video. And let's start with number 1. What's happening in the real estate economy right now? Now, just so we're on the same page, when I talk about real estate investing, I'm not talking about you going out and buying a house to live in for yourself. I'm talking about you going out and buying a house to rent out to somebody else. I'm talking about you going out and buying an apartment complex. I'm talking about you going out buying a storage center, a retail building, a mixed-use building. I'm talking about you going out and buying property that you can rent out to somebody else in exchange for rent payments, which will cover your expenses. That's the type of real estate investing that we're talking about. Now, I want to focus in a little bit more specifically on the residential side because there's a lot of data on that. And what we've been seeing is housing has become very expensive, and there's a lot of different opinions as to where the housing market is going to go over the next 12 months. Let me show you what I mean. Many of the big real estate companies out there publish some sort of annual report as to their predictions on where the housing market or real estate market is going to move over the next 12 months. And after doing some digging, what we have found is that the National Association of Realtors believes that the housing market, meaning housing prices, are going to grow by 2% over the next 12 months. The Mortgage Bankers Association believes that the housing market, meaning housing prices, are going to grow by 1.5% over the next 12 months. Zillow believes the housing prices are going to grow by around 2.6% over the next 12 months. And Redfin believes that the housing market, meaning housing prices, are going to grow by around 4% over the next 12 months. Now, there's one thing I want you to remember. Nobody knows what's going to happen. It is all a guess, and take everything that you see and hear with a grain of salt because number 1, nobody knows for sure, and number 2, each one of these industries are involved in the housing market space, so obviously they're a little bit biased. Now, if you've been reading Market Briefs, which is my free financial newsletter, you've already been exposed to this information before. But the thing that I want you to remember is as a real estate investor, there's 2 things you want to be aware of. Number 1 is obviously the value of the real estate, but number 2 is the rental value. Because when I invest in real estate, what's more important to me than the price of the property is how much I'm going to generate in rent. Because if my housing value goes down or my property value goes down, it's not a big deal as long as the rent values are strong. So you want to pay attention to what's going on with rental values as well, and we're getting a lot of mixed data. According to some data, there's news saying that rental values are going to rise in 2025, while other data says that rental values are going to fall in 2025. Now, of course, real estate is very localized. What's happening here in Detroit is going to be different than Manhattan, which is different than Los Angeles, which is different than Austin. And so each pocket of the country is going to see something different. But the themes that you want to pay attention to is what's happening across the broad economy and what's happening across the broad real estate economy. That way you can make smarter decisions. Now, of course, if you want to stay up to to date on what's happening, when it's happening. Market Briefs is a free financial newsletter where every day my team is breaking down what's happening in things like the real estate market, the stock market, the crypto market, the global economy, and our own economy into a fun and witty and easy to read newsletter. You can read it in less than 5 minutes every morning, and we have hundreds of thousands of investors that read Market Briefs every morning. So if you have not joined Market Briefs yet, I have the link for you to join down in the description below. So when it comes to the real estate economy, of course, nobody knows what's going to happen for sure over the next 12 months, but a lot of real estate agencies believe that the housing market is going to continue to grow, while rental values are going to be a little choppy, that there's some more uncertainty as to what's going to happen with rental prices, which brings us to number 2. What's coming with regulation and tax changes in the real estate market specifically? Now, I want to premise this section with we don't know what's going to get passed. But what we know right now is that there's a severe housing shortage still in the United States. And there's a couple reasons for this. Number 1 is builders have had a tough time building, partially because they don't know what's happening with mortgage rates, they're uncertain about the economy, and then there are some regulations that make it difficult to build. Number 2 is some people don't want to sell their houses, because if you have a house with a 30-year fixed rate mortgage at 2.5%, 3.5%, even 4.5%, you might now feel very incentivized to sell, because then you have to go out and get a 6.5% or maybe even a 7.5% mortgage, which isn't very attractive. And so a lot of people are sitting in their houses saying, I'm never going to sell my house because of mortgage rates. And this is where we don't know exactly what's going to happen, but the first thing that Trump has talked about is making more federal land available to potentially build real estate, meaning sell some federal land so developers have access to more land to build more properties to house people. Secondly, during Trump's campaign, he talked pretty openly about wanting to cut interest rates and wanting to see lower mortgage rates. And if that happens, that could potentially incentivize more people who are sitting in houses to potentially sell their houses if mortgage rates fall. The difficult part about that is that the president doesn't have the ability to set interest rates or to set mortgage rates. Now, there's a difference between interest rates and mortgage rates. When I say interest rates, I mean the federal funds rate. This is the interest rate set by our central bank, the Federal Reserve Bank, which changes how much interest banks charge each other when they lend each other money. That is the federal funds rate. So when you hear about the central bank cutting or raising interest rates, that's what they're talking about. They're not talking about your mortgage rate. However, this cutting or raising of the Federal Reserve Bank interest rate can affect or impact your mortgage rate. When you cut the federal funds rate, it can give more breathing room to banks to potentially cut mortgage rates. But what we've seen up until now is that the Federal Reserve Bank began cutting interest rates in 2024, but mortgage rates actually went up, not down. So you can start to see a little bit of a problem here, because Trump doesn't have the ability to control mortgage rates, and he doesn't have the ability to control interest rates. However, there's a chance he might put some more pressure on the Federal Reserve Bank to cut interest rates, and maybe he'll come up with some new programs to incentivize banks to cut mortgage rates too, but we don't know what's going to happen because that's not entirely in the control of the president, but it's something to pay attention to, especially given how much he campaigned on that point. And then there's a third part, which are potential tax changes that we could see in 2025 and beyond, which could benefit developers and it could benefit investors. Now again, we haven't seen a full tax proposal yet, but we all know that Trump is a big real estate developer. He's a big investor in the real estate space, so there's a chance that he could put out more tax incentives to benefit real estate investors, to benefit real estate developers. But again, we don't know exactly what's going to get passed yet, although there have been some rumors about that. So now that we've established some changes that we could see in the economy when it comes to regulations this year, let's now get a little bit deeper as to what are your potential investment opportunities. Let's take a look at how different assets performed in 2024. If you kept your money in cash, assuming that you put your money into a high yield savings account, you might have been able to get, we'll call it a 4% interest rate on that cash by moving your money into a high yield savings account. If you had that money in real estate, what we saw in 2024 is the housing prices in America grew by around 4.5% in 2024. Now remember, when I say 4.5%, this is just how much housing prices increased. This is not factoring in your rental income that you got, assuming that you're making a profit on your rental income. And that's going to depend on your investing strategy, and I'm going to talk about that in the next part of this video. But housing prices in America grew by around 4.5%. The stock market, more specifically the S&P 500 in 2024, grew by around 20%. Gold prices in 2024 grew by around 30%, and Bitcoin in 2024 grew by around 100%. So now, if you're looking at this, you might say, well, Jaspreet, the clear answer here is Bitcoin. 100% gains, that's huge. Which, yeah, that was the best thing that happened in 2024. But what I want to remind you here is that past performance doesn't always indicate future performance. And you also have to value in risk and expertise and your goals. And once you factor that all together, that's when you can come up with a proper investment strategy for you. It's safe to say that crypto prices boomed in 2024, but nobody knows what's going to happen in 2025. And if you have been involved or paying attention to the crypto market in any capacity over the last number of years, we know that crypto prices, Bitcoin prices can boom, but they can also fall just as fast. So this comes with more risk. When we talk about gold, well, the interesting thing about gold is it doesn't really produce any additional value. When I invest in gold, my gold just sits there. It doesn't actually do anything. It just sits there and looks back at you because it's just sitting in a vault. It's sitting in a drawer. It's just sitting there not doing anything. It's not producing value like maybe a stock. If you were to invest in the Amazon company, well, the Amazon company is working to produce more value. They're working to create more products, to create a bigger profit, and to produce more things, to grow their profits. So you can see the value in a stock versus gold. I'm not saying it's bad to invest in gold. I'm not saying it's bad to own gold. I want you to understand the different possibilities and different things you want to think about when you're investing your money. When you compare stocks to real estate, well, stocks are more liquid. Stocks are more volatile. Stock prices can move up and down very quickly, and you can sell in and out of your stock very fast. Real estate is a hard asset. You can see, feel, and touch the real estate. It's something that you can control, so you don't see those big price fluctuations in real estate the way you do with stocks. Not to mention that when you invest in real estate, you also get some of the biggest tax breaks out of any of these. As a licensed attorney who's not your attorney, what I can tell you is one of the reasons why wealthy people love investing in real estate is because you get some massive tax breaks, which can allow you to earn money and pay little to no money in taxes. Not to mention, when you invest in real estate, you can produce a very steady stream of income, assuming you know what you're doing and have a good management team. Not to mention, with real estate, you have two ways to get paid. You can get paid through price appreciation and through rental income. This is where you have to decide what's right for you. Obviously, cash, I don't consider cash a real investment, but it's a good part of your portfolio because you want to have some cash to, number one, protect you against an emergency, but also to be able to buy an investment when you see an investment opportunity. And this is where you have to find the right portfolio style for you. Some of you are going to say, well, I want to dump all my money into stocks, or I want some stocks, some real estate. The thing that I want you to remember is the people on the internet that are saying, if you want to get rich, you have to buy stocks, or if you want to get rich, you have to buy this crypto, or if you want to get rich, you have to own gold. They're generally selling you a program. There are some people that have built insane amounts of wealth who only invested in real estate and did nothing else. There are some people that built insane amounts of wealth that only invested in stocks and nothing else. There are many different ways to build wealth. You have to find what's right for you. See, I make these videos to help you be better with money. I don't make these videos to make friends, and you have to know how each asset plays a part in your overall investment portfolio. Maybe you have some of each of these. Maybe you have some of only two of these. Maybe you have some of three of these. You have to know what's right for you based off of your expertise, based off of your goals, and based off of your risk tolerance. Not to mention, it might not be a bad idea to have some real diversification, which is diversification across multiple different asset classes, because if stock prices crash, well, then you can have some real estate or some gold to protect you. Likewise, if crypto prices crash, you could have other assets to protect you as well, because we know real estate prices go up and they go down. Remember the 2008 crash? We know the stock prices go up and they go down. Remember the 2020 pandemic? We know the gold prices go up and down. We know the crypto prices go up and down, and we know the cash generally loses value to inflation. But having a well-diversified portfolio can help you in different phases of the economy, which is why you have to know what's the right opportunity for you, and nobody knows what's going to come next week, next month, let alone next year, which is why you want to have a strategy for your investments. Now that we understand the different opportunities that you have out there, let's talk about how do you actually win as a real estate investor in this economy. Every real estate investor is going to have their own goal and their own game that they're playing, and I can't tell you what other investors do, but I can tell you what I do. And I don't recommend what I do to anybody else, but I'm going to tell you what I do. That way you get a sense of how to understand the real estate investing game. When I invest in real estate, my goal is cash flow. I mentioned this just a couple of minutes ago, that when I'm investing in real estate, I really don't care what's happening with property values. I don't care if property prices are going up. I really don't care if they're going down. The game that I'm playing is understanding the cash flow, because my goal is to stack the cash flow. My goal is to understand how many dollars do I have to invest today and how much cash flow am I going to make every single month from here on out, because I want to stack the cash flow. If a property can pay me $100 a month, then my game is to stack these properties. How many properties do I need to get to $1,000 a month, to $2,000 a month, to $5,000 a month of steady cash flow from the properties? Because once I buy the properties, this income is pretty passive for me because I have a management team in place. So the way it works is I'm going to go out and buy this property. Again, I'm not buying it for me to live in. I'm going to buy it to rent out to somebody else. Let's assume, hypothetically, that I'm going to go out and buy this property for $200,000, which, by the way, if you're thinking, where in the world could you ever find a $200,000 property, Jaspreet? Look outside of your neighborhood. If you're in the Midwest, if you're in the Metro Detroit area, you can find these types of properties all day and night long. So you buy this property for $200,000. Let's assume, for the purposes of this example, that I'm going to buy this property all cash, no debt, because it's going to make the analysis a little bit cheaper. Now, I'm going to want to go out and rent this property for, let's call it $2,000 a month. Now, it's a good property. A family's going to come in, live in this nice property, pay me $2,000 a month. But all this $2,000 that I'm making is not profit. I have to pay for my expenses, which are, number one, I got to pay for the property taxes. And when you have a rental property, generally you're going to pay a premium in property taxes. And to get an idea of what the property taxes are going to be, talk to the city assessor, and they will give you an idea of how much the property taxes will be after you buy the property. Then you got to pay for the property insurance. Again, property insurance can be expensive depending on where you are. The best way to get an idea of how much the property insurance is going to cost you is by talking to an insurance broker. It's going to take you 15 to 30 minutes of your time, but they will give you a free quote or estimate on how much your property insurance will cost you. Then you're going to have to pay for a manager, because I don't want to manage my properties. I have a full-time business that I run. I run a company called Briefs Media. I don't have the time to sit there and talk to tenants about the toilet breaking. So I pay for a manager. I know a lot of people say, well, now you got to pay the manager and they're going to cost more money and they're going to eat into the profits. Sure. But there is a value and a price on my time. And even if you don't go out and hire another property manager, you want to value your own time. So when you're doing this analysis, you have to factor in the manager cost. And I personally would never want to manage a property myself, because I don't want to be in the management business. I want to be in the investment business. I want to be in the acquiring business. I want to be in the owning business, not the management business. So you have to factor in that manager cost. How much does the average manager cost? Well, if you got a really good deal, maybe 5 or 6%. They can also cost you upwards of 10 or 11%. Sometimes I have seen them cost upwards to 12%. It depends on how much they're going to do for you and how hands-off you want to be. But generally, I would say 7 to 9% is kind of that sweet spot for a fully hands-off property manager that should be able to do a pretty good job. Now, you're going to have to monitor the manager. I've had to fire many property managers, but you want to make sure that you're getting paid, that they're doing the job, and they're not overcharging you on the construction and renovations and maintenance. Which then brings in the fourth cost, which is maintenance. Because the reality is things will go wrong. Tenants are going to move in and they're going to break something. Something's going to happen in the property. The window's going to break. The AC is going to stop working. The furnace is going to stop working. You have to pay for that. So you want to factor in this cost. And the amount of money you're going to pay in maintenance is really going to depend on how old the property is and how well kept the property is. And of course, how good the tenant is. But a simple rule of thumb is just to take 10% of your gross rental income and apply that to maintenance. So if you're charging $2,000 a month, just apply $200 a month towards maintenance. You're going to have some months with no maintenance costs, other months with $1,000 in maintenance costs. So you can take the $200 a month that you're putting aside and use that for that maintenance. And then lastly, I always like to factor in a vacancy cost, because the reality is tenants are going to move out, leases are going to expire, and you're going to have some turnover on your properties. So I always want to factor in a vacancy cost. So the 5 costs, the 5 expenses that you always want to factor in are property taxes, insurance, management fees, maintenance fees, and vacancy costs. You add this all up, and this is going to give you your total expenses. You take your expenses, you subtract it from the income. So hypothetically, let's assume that all these 5 expenses are going to cost me, we'll call it $1,000 a month, which means my expected monthly net income is $1,000 of profit a month. which means over the course of a year, if I'm making $1,000 a month in profit, I should be making $12,000 a year in profit from this property and passive cash flow. Now the question is this a good return or not? The answer is, again, it depends. It depends on you, it depends on your investment goals, and it depends on what types of things you're looking for. When I invest in a property, what I'm looking for is a 7% cash on cash return. This is just what I look for. I want a 7% cash on cash return. This is not taking a look at property appreciation. This is not me assuming that this property is going to be worth $300,000 in the future. This assumes that if I bought this property all cash, I put in $200,000 today, I'm going to make 7% on my money. 7% of $200,000 is $14,000 a year in positive cash flow, which means this is under that threshold. So for me, this is probably not a good deal. But what I look for is a 7% return because that gives me margin. That gives me cushion. What do I mean by that? Because if I have a 7% cash on cash return, now if something bad happens, like let's just say we enter a recession and I have to cut the rent, well, I have margin to do that and still be profitable. That's why it's important for me to have some margin in the deal. There's a lot of people that I've seen that have met over the last few years that don't really care about the margin because what they're looking at is how much I can sell this property for in 3 years. I'll buy this for $200,000 or $300,000 or $400,000 today. I'll be able to sell it for double in just a few years. That to me is speculation. I don't like that game. That's not the game that I play. I want to invest my money into a growing area with growing populations, growing demand, and more businesses moving in. Because if there's more people that want to live in this limited neighborhood, then generally that helps rental values go up. And if rental values go up, that means my profit can also go up. And that's the game that I play. So how do you win in a changing economy? Have margin in your deals. Because we don't know what's going to happen. We don't know if we're going to enter a recession or if the housing market and rental values are going to boom. But regardless, I want to see steady cash flows. I want to preferably see growing cash flows, but of course, I don't know what's going to happen in 2026 or 2027. Nobody knows. Ideally, markets will keep growing, asset prices will keep growing, wealth will keep growing across all incomes, lower, middle, and upper incomes. But we don't know. But the way I can protect myself is by having margin in the deal and making sure I'm not overpaying for the property. You might have heard people say you make money when you buy. What that means is you're buying a good deal that makes sense today. I know sometimes it can be very painful to keep going through deals and not closing on deals because you just keep seeing bad deals. You have to be pickier now. It's not as difficult as it was 3 years ago, but it's still difficult today. You have to be picky, find a good deal, and there are still opportunities out there. Just make sure it's a good opportunity. That way, in case something bad happens, you can still protect yourself and not have to now pay out of pocket to maintain the property. Now, with that being said, I want to hear from you. Do you think that this is a good time to invest in real estate? Why or why not? Let me know down in the comments. And as a quick reminder, if you have not joined Market Briefs yet, my free financial newsletter, I also have that link for you down in the description. Our economy is going to change in 2025. And in this video, I want to show you how you can find the investment opportunities that most people are overlooking. Take a look. President-elect Trump is entering the White House in January, and he wants to make some sweeping changes to our government and economic policy. Let me show you why this matters. In 2024, the United States